Good morning. We're taking a look at gold, and as you can see, we've had a reversal month in gold, which is probably the first time that we've actually seen this in recent times. You can look back to 2011, we had it then. Now, I don't think the gold is finished on the upside at all, but look at the monthly charts, they diverged. Okay, so when the market made new highs, these didn't, not on the stochastics and not on the monthly RSI. That's a little warning to us, so just bear that in mind as we go through the different time frame charts this morning, which is what I'd like to do. So you can see the monthly, you can see that we had not a great week. We are below some key pivotal areas at the moment. You've got the monthly pivot coming in at 1606. You've got the weekly pivot coming in at 1611 and the daily pivot coming in at 1590. So they're all around that area. Because most of the action obviously in gold happened last week. So let's take a look at the weekly chart. So a key reversal week would mean a close below the previous week's low. Now the previous week's low was at 1578. Our close on Friday was at 1643, so it didn't close where it should have done to make this a key reversal week. It was an outside week, to be sure, and it's something you've got to keep your eyes on, because look, the indicators are diverging once again on the weekly charts. Keep your eyes peeled. As you can see, so far this week, we've hit the weekly pivot. That's at 1611. Our high this week has been 1610 spot 94. You can't get much more to the level, all right? So just bear that in mind, that it was a reversal week and we need to break through, I think, to keep this going higher. We have to take out 1611. Okay. Now we'll scroll this down to a daily chart and see. What you do is you get to know where the weeklies and the monthlies are, and then what you try and do is marry it all up to the shorter term time frame, which is basically what we all trade. Now, when you get a move like this down, we call that a dead cat bounce, and that can extend really through to, I suppose, Wednesday, Thursday. You know, a three to 4 day bounce is not out of the question. And then what happens is, if you just put little Fibonacci's on, just little ones, and you can see quite clearly that even putting these little Fibonacci's on, you can see that the 38.2 fib daily is at 1612. So it's tying in. It's tying in with little bounce. This has made its move. This is still on the way down. And as long as we stay below this 1611, 1612 area, we will be fine for it coming down. Looking at the 55-day moving average, which is at 1560, and if you look at what the previous low was, that was at 1649. So there's your benchmark, if you like. There's where you cannot break below if you're to maintain this uptrend. It won't allow, we don't allow it to go through previous lows. You have to have higher lows and higher highs to say we're in that. This looking like could have topped because of the way that it went up, closed down, and spent the rest of the time just dicking around here and then making its move on Friday. The downside supports I've given you to 1560, 1545. Underneath that you have this level here that's coming in at 1535, and then obviously you've got all this lot over here, and that's coming in at 1517. We know 1516 to 1518 was a very good level because that's where we couldn't break through for quite some time. Okay, well I think I've done all I'm going to do on gold. Just remember levels, remember the pivot points that I've sent over to you and that are on the chart. Okay, they're there. So as you're watching this video, you can see where the weekly, monthly and daily pivot points are. And you can also see the 38.2, so there's your resistance. Where are we wrong on going short gold? We're wrong above 1628. And then we're up with the fairies again, and we'll probably go back and test that 1693. Okay, good luck. I'll catch you later.